business interest expense can significantly reduce taxable income. But can a company deduct the full amount every time? In this case study, we'll walk through Section 163J step by step and find out. Here's the problem. A company has business interest expense of $1.425 million. But under Section 163J, interest deductions may be limited. So the question becomes, will the company deduct the full amount or create a carry-forward? Why was Section 163J introduced? Large interest deductions can substantially reduce taxable income. To limit excessive deductions and protect the tax base, Section 163J introduced limitation rules. So now let's answer the key question. Can our company deduct the full $1.425 million? Before performing any computation, we first gather the required information. We need taxable income, business interest income, and total business interest expense. These inputs will drive the entire limitation calculation. Let's simplify the process. We'll solve this in 5 steps. First, determine ATI. Then apply the limitation. Compute total limitation. Compare against actual expense. And finally, determine whether a carry-forward exists. But what happens if interest exceeds the limitation? Step 1. Determine adjusted taxable income, or ATI. For this case study, we start with taxable income. Add back business interest expense and reduce business interest income. This gives us an ATI of $6.769 million. ATI becomes one of the most important numbers in the entire computation. Next, we apply the Section 163J limitation. The rule generally allows a deduction equal to 30% of ATI. Applying 30% gives us a limitation amount of $2.030 million. But we're not finished yet. To determine the total limitation, we add business interest income. This brings total limitation to $2.120 million. Now let's compare. Our limitation equals $2.120 million. Actual interest expense equals $1.425 million. Since expense is below the limitation, the company still has unused capacity available. So what does this result tell us? The company deducts the full interest expense, no disallowance, no carry forward. But now let's change the facts. What if interest expense exceeded the limitation? Let's test a hypothetical scenario. Suppose interest expense increases to $2.8 million. Now expense exceeds the limitation. The excess amount is not permanently lost. Instead, it becomes a carry forward and may be deductible in future years. Now let's connect the computation back to reporting. Here we summarize the results through Form 8990. Notice how ATI, the 30% limitation, and business interest income all work together to determine the final deduction. Here are the key takeaways. Section 163J does not automatically disallow interest. ATI drives the calculation, and any excess interest may create future carry-forwards. The numbers determine the result. This example was prepared for educational purposes using simplified assumptions and hypothetical scenarios. Real tax outcomes may vary depending on facts and current rules. Thank you for watching. For more simple and structured U.S. corporate tax case studies, follow along. And one final question. What happens when tax rules change after OBA? See you in the next one.